Tom Lee is Fundstrat's head of research. He came down to Post 9 as well. It's good to see you back here.
Yeah, great to see you, Scott.
I mentioned this flash, what you called it, that you put out. You're impressed by the strength in stocks, even on a day where we got a blistering hot PPI.
That's right. We've had a lot of bad CPI prints. Yesterday CPI, today PPI, and not only are stocks holding up, but the bond market's actually been taking this really well. The curve steepened. So, yeah, I think whenever you see something like that, it does sort of catch my attention.
I mean, the point to you is that you feel like almost all of the bad news is now firmly baked into this cake?
Yes, I think in a way the market's not being surprised by bad inflation data any longer. And there are maybe hints that inflation could be peaking. And I heard Scott Minerd and even Jeff Gonlock mention the same thing, and I think it's encouraging for markets.
A couple of bond kings making the call is, no slouches, right? Talking about the bond market and inflation, right? You want to listen to what they have to say. Not that they're always right.
Correct.
You still need to pay attention.
That's right, because, at the end of the day, the stock market listens to the bond market, and the bond market was screaming hawkishness for a long time, and now I think the bond market is sort of satisfied where the levels are, and now inflation data isn't ruffling the bond market.
Should I now really be convinced that it's okay to buy stocks?
I think in the interim, a lot of bad news.
You paused there a little bit, right?
Yeah.
You're afraid to maybe, go full bore here. You're not like a raging bull, but you're certainly more positive than negative, it sounds like to me.
That's right. And relative to consensus where everyone's gotten bearish, we seem quite bullish. I do think there's still greater than a 90% chance February 24th was the market low. Doesn't mean we go straight up from here. But the reason I think stocks can be viable is that there's a chance the Fed could make a potentially dovish pivot, because as one of the things we point out in our flash is that the market's expectations for hikes has dropped from 9 to 8 this year in just a matter of 2 days.
I hear you, but right, I mean, Waller was just on, right? He's talking about front-loading rate hikes, right? 50 at the next meeting, more following that. You got Bullard out. Now, their word isn't in stone, obviously, but nobody who has spoken on behalf of the Fed, including the most dovish person on the Fed, arguably, Brainerd, suggests that there's any sort of pivot in the offing. I wonder if that's like false hope.
Yeah, it could be false hope, but nothing's cast in stone, as you said. So today, all the data today supports the Fed being really tough and aggressive in the near term, May and June. A few months ago, that would have rattled markets. Now the stock market's taking it in stride. So I think if we're talking about front-loading some hikes, but then as we get into September, things could take a dovish pivot because inflation's cooling, that would be positive for risk assets.
Now, everybody's trying to come up with the next and greatest acronym. You have BEEF, B-E-E-F, Bitcoin plus Bitcoin equities, energy, and the FANGs.
Yes.
That's your best strategy right now for investors watching?
Yes, yes, that is.
Tell me why.
Well, FANG, we think, let's start with the bottom. FANG, I think in the next 6 months, they got obliterated, been in a bear market now for more than a year, reasonably priced, GDP grower, inflation protected. Energy we've liked for a long time. It's still our top sector pick. And then we like Bitcoin and Bitcoin equities because if the environment shifts to risk on, crypto follows. And, we have to keep in mind, April 18th is tax day, and crypto has about $500 billion of capital gains taxes. So on a T+2 basis, people have to be selling their crypto and their stocks by today in order to pay their taxes by Monday.
But don't you need a really risk-on market to go Bitcoin right now, don't you? I mean, it's so highly correlated to it.
Yeah, or you could get regulatory clarity, and there are chances for that, because as you know, the Federal Reserve's trying to get some feedback on their white paper on the central bank digital coin. We might get some clarity on a Bitcoin ETF. Corporations are using Bitcoin, so I think the usefulness of Bitcoin is rising, and if you have more users and more reasons to use it, that's why Bitcoin could go up.
So risk goes back on. People put money into crypto like Bitcoin, and then we go back to the Qs, and we just go right back to the growth trade?
That's right. That's what I think is sort of what makes the second half strong. And of course, NASDAQ is a huge component of the S&P, and that's what keeps us from hitting the February 24th lows.
What if inflation hasn't peaked? What if everybody's getting a little too giddy?
I think we have episodic inflation. So I think it's correct. We're still going to see worse wage inflation and shelter inflation. But what people have to keep in mind is that goods inflation was a huge contributor last year. Used cars alone was 1.5%. New cars was 0.4, so that's 2 percentage points of the 4% was just cars. And that's now potentially going to be a negative CPI effect in the second half of this year.
Quickly, the one sector that you absolutely would stay away from is what? More than any other right now.
Well, I think the toughest group right now to own is the stay-at-home stocks. And that's because they're so widely owned now. And I think Bitcoin equities is going to be a better way for people to play sort of secular growth and hyper-growth if they're coming back into the triple Qs.
Like a Coinbase rather than a Zoom. Not that I'm just throwing those names out, so it's kind of obvious what we're talking about.
That's exactly right. Silvergate, Coinbase, Core Scientific, the miners. These kind of stocks, I think, are going to be multi-decade stories where stay-at-home was about COVID, and that's harder to make a secular growth case now.
It's good to see you as always, especially here in person at Post 9. That's Tom Lee of Fundstrat. Up next, we have a